The dollar versus Swiss franc is trading up and down and trading here today after trying to rise yesterday and falling short of targets and moving back to the downside. What are the technicals telling me now? I'm going to go through it in this video, so let's get started. Looking at the hourly chart of this currency pair, looking in the past, we've had instances where the 200-hour moving average and the 100-hour moving average did a pretty good job holding resistance. We had for sellers right here, push price down, sellers against a 200-hour moving average, push price down, sellers against 100-hour moving average, pushing the price down. However, over the last 3 or 4 days, the price has been able to extend above the 100-hour moving average in particular and fail, but it didn't get above the 200-hour moving average. Yesterday, the price was able to get above both of those moving averages, 100 and the 200-hour moving average. But you can see the result here against the 200-hour moving average, sloppy up and down, above and below the level. And trading here today, the same thing is happening as well as the market tries to move higher, tries to break to the upside, tries to weaken the Swiss franc against the US dollar, but then falling back to the downside. And today we're seeing that same pattern exist with a lower high as well, signifying that sellers are trying to take back more control. Now that control is amplified on a break below this level right here. This is a swing level that had different swing lows and swing highs going back in time through here. It got messy through here and here, through here where the price moved above and below that level, but reestablished some resistance against these levels. It's not perfect, but it tried. And so that should have sent the price higher, but it didn't. It fell below that level. And now we are back down testing the 100 and 200-hour moving averages, which did their jobs right here, right here, but got a little more sloppy over the last few days of trading as the market works its way through the interest rate decisions in the U.S. and other news items that are causing the volatility. So, but nevertheless, we still have to respect these moving averages. If the price were to move below both the 200 and 100-hour moving average down at 0.90504, that would give the sellers more confidence to push to the downside and perhaps back down toward the 38.2% retracement of this move to the upside. We did fall below that 38.2% retracement on Monday during the volatility from the U.S. stock market's sharp falls to the downside. You can see how the price tried to hold resistance on the rebound up here, but then broke above that level. So this level would be another key level on the downside. Going forward, may not happen today, but going forward, but first things first, we need to get below the 100 and 200-hour moving average to increase the bearish bias. Alternatively, there's reason for buyers to lean against these levels. Why? Because risk can be defined and limited against it, because it's worked in the past over here as resistance mostly. Why not have it as support? So be aware, if you want to buy the dollar, if you want to sell the Swiss franc, this is the area that you want to lean against and put a stop below the 100-hour moving average. So that's my technical look at this currency pair. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.